Yes, hello, good morning, thank you, and welcome to our Tax Savings Tuesday. I just got back from my weekend vacation and I needed it after tax season. But more than anything else, we still provide you with the different tips for the tax and bookkeeping after tax season. But on top of that, we are starting to provide some financial services tips as we are opening our company for wealth planning and wealth management. Again, I'm Christopher. I'm CEO of YCO Tax. We provide accounting and wealth planning service solution here in the US. And today we're going to talk about the different bookkeeping and tax savings tips. Because for those of you who haven't filed, you still have the deadline to file your, what do you call this? To file your tax when your personal tax return is it's due on October 15. However, if it's a S corporation and partnership, you still have September 15. So with that being said, I'm gonna share my screen to for you guys to understand that a good record keeping start with or a good tax savings, it starts with a good record keeping. All right, so there you go. I'm sharing my screen, and after this presentation, there will be a replay on our YouTube channel. So if you would like to have a free consultation, feel free to type your full name, email, and then type free on our number. It's 956-425 WYCO or 9926. We will have a Q&A session later if there are some questions on the chat, on the Facebook, and other social media that we are live on. Hi, David. Thank you for tuning in. And then be part of our gift card raffle. All you have to do is subscribe on our YouTube channel, Chris Y. Coco, to learn more on the different tax savings tips we record there's so many videos that you can choose from. All right, so we're going to skip this part. Just this disclaimer, this presentation is only for presentation purposes alone, and it is not intended for any tax advice or even accounting advice or legal advice. Wyco Tax is a virtual outsourced accounting and wealth planning company. We are not associated with any institution on this presentation and is a private business providing resources for small businesses. A lot of our clients are typically people that are healthcare or other general industry mom and pop shop, but at the same time they also are the employees and running their companies CEO, but at the same time the employees of the companies. So that's why, for example, with Gloria, this is our ideal client. She's a doctor entrepreneur that owns a clinic, but she's preparing all her tax and financial documents. What are the things that she needs to keep in mind related to her financial documents? So we just want you to write the Tax Pro tips as we created the acronym Tax Pro tips. We're going to start with the T, which is the tax deadlines. Every now and then, every year, the deadline for personal return and C corporation are always April 15, unless otherwise it falls on the weekend or holidays. Then the next regular working holiday will be the deadline. For the difference is when you are in a partnership or S corporation, the deadline is 1 month earlier. These are the 1120S or S corporation and partnership return, or what you call 1065. Then letter A, you need to automate and integrate your record keeping. We highly recommend that the thing of using shoe boxes and then all this manual and then physical paper are the thing on the past. You could actually integrate and start using your QuickBooks. For us, we are a certified QuickBooks user, but there are other accounting software like Xero, FreshBooks, making bookkeeping more efficient and less prone to errors. So wherever you go, but I do highly recommend to use QuickBooks online. You do not need to download any desktop that actually eats the memory of your computer. It slows it down. So even if you're traveling abroad or even in on your vacation, you can easily log in to see your financial statements online. Then at the same time, you have to integrate your bank accounts, your business bank accounts, link your business bank accounts and credit cards to your accounting software or actual automatically import transactions. Again, so the next is extend the personal expense to become business expenses. These are the commonly overlooked strategy for a lot of businesses. You cannot just do owner's withdrawal. So, for example, you made 2.3 million, and then you, out of all the expenses, you still have the 300,000. What you do is you keep doing owner's withdrawal. Those 300,000 that you withdraw, like, using owner's withdrawal, they are still taxable at the end of tax season. So they still gonna charge you at least 20 to 30% on that 300,000 alone. So what you can do is, why don't you put yourself, like the home office expenses, you can use part of your home exclusively, and regular for your business, you can deduct a portion of your rent or mortgage, utilities, etc. And then also business related travel. If you're traveling for business, you can actually deduct expenses like airfare, hotel stays, meals, and even transportation cost. A lot of people are asking, can they do business and pleasure? Yes, you can definitely do that. If you are traveling for 1 week, then maybe on the weekend you could do your personal stuff, and then you can still deduct the 5 day hotel expenses that you incur together with your family, the airfare, meals, and even transportation costs. But this is more like a divided amount, okay? It's not the whole cost, but at least you still make the most out of your expenses. Then next tip, this is number four. Please stay away from using cash transactions. Like with Gloria, she this is a typical case. When you keep using cash, there's no clear documentation. When cash transactions can be difficult to track and verify, making it harder to prove the income and expenses in audit. And also, it through when you don't use cash, it reduces the risk of errors or misreporting. Cash transactions are more prone to human errors, such as forgetting to record and payment or underreporting income. But also, it can be potentially there's could be cause of money embezzlement. This actually happened to Gloria because there are ghost employees that are being paid cash by the manager, and also there are some cash transactions that have no receipts or no backup. They just withdraw from the income, and then it's just also paid as cash without proper receipts or documentation. So it's gonna hurt the business in the long run. And then also next, remember letter R. You have to regularly review financial and tax review with the pro. I do suggest you need to at least quarterly have a consultation with a tax pro or an accountant, bookkeeper that you think. By reviewing your financial position throughout the year, you can adjust your income, expenses, or retirement contributions to manage your tax liabilities effectively. Again, they said you cannot hit what people don't plan to fail. We only fail to plan. So we always make sure that we see our numbers regularly so we can make objective decision for our business. Next, we have letter O. So I'll optimize tax sheltered accounts. So whenever you have a company, for example, Gloria, she can reduce her taxable income. The thing is that with noticing with the solo entrepreneur, they don't even have a retirement plan. So they need to park their money because you do not want to work forever at the age of 60 or 65. What was your backup plan? You want to consider 401k or traditional IRA, potentially lowering your overall tax liability, and also try to explore the executive bonus plan, Cayman Insurance, where your company can actually insure you as the manager. For example, Gloria, she's the manager, so she's under payroll. The company can pay maybe 2,000 per month. That's equivalent to $2 million of life insurance policy. So if whatever happened to Gloria, if there's any debt of the business, the 2 million life insurance will cover the debt of that. But at the same time, if this is a type of executive bonus, if there's no death or sickness that happened to Gloria when she retired at the age of 60 or 65, she only invest 10 years payment plan, 2,000 times 12 times 10 years, that's 240,000 investment. But it can potentially grow through an index. So the index conversion, she could start receiving retirement or loan from her policy, maybe 40,000 for 20 years. That it's equivalent to 900,000 because that's the power of the index. And those are non-taxable retirement benefits. So can you imagine you put your 240,000, it's a business expense of your company, and at the end when you retire, you receive up to 900,000 of retirement income non-taxable. Because under IRS Section 7702, the cash value accumulation with permanent life insurance policies like whole life or index grows on a tax deferred basis. And then you consider there are other credits. So, for example, Gloria has been developing her mobile app. She wants to do virtual telehealth for her clients. So, she can consider the research and development tax credits. But there are other credits like energy efficient home credit that also offsets her taxable income in a year to year basis. And if she's investing in solar credits, she installs solar energy in her home or business, she may be eligible to federal tax credit worth 26% of the total installation cost. Do not forget to issue a 1099 to your independent contractors because this reduced taxable income ensure that your contractors are responsible on paying those taxes from the income they receive from your company. Then the last two, pay your payroll for yourself. Again, going back to if Gloria is making 2.3 million, instead of her doing owner's withdrawal, if she still has a 300,000 taxable income, might as well issue herself a 200,000 salary because she still has to pay her own personal bills like mortgage if she has kids, education, daycare, all of those things. So instead of her transferring money from business to personal, just issue herself a regular. It could be 10,000 per month, 15,000 per month. What is a reasonable salary of a doctor nowadays, right? So that would work, and that would be a business expense for her. Okay, and then lastly, separate personal and business bank account all the time. They asked me when is the best time to open a business bank account. I said when you start to open your business, you need to have a business bank account. Do not rely on your personal bank account because there was this instance that Gloria started to apply for the loan, but she did not use her business bank account for all her income. She used her personal. So when she applied for working capital amounting to $200,000, they are looking for the business income statement. So it's case to case basis. But if you're serious with your business, and I mean, you don't want to open a business and you just want to be half hearted on it, you really want to make these things work, right? So that's why it's better you have your own business bank account. It improves your business credit score. It actually um, separate and doesn't commingle your business or income transactions. All right. Again, there's a minimized. You also minimize the audit risk. Clear separation of business and personal finances helps demonstrate the legitimacy of your business expenses. The audit period for personal is 3-year period, but if there's an underreported income by more than 25%, it's a 6-year audit period. There's no time limit if there's a fraudulent file return or don't file return. There's no statute of limitation. All right, so that is the top 10 tips. You could watch this replay on our YouTube channel at Chris Y. Coco. Just go there. So the 6 areas of the services of of YCO tax are divided on 6 slices. Again, when I discuss this to business to my clients, that sometimes when you're running a business, it's like buying a box of pizza. You only buy the box and you do not eat the slices on it. What do I mean by that? When you run a business, there's so many tax benefits inside, and that's represented the 6 slices. But you have to know and to utilize what are the 6 slices for you to have a tax savings. The slice number 1 is the entity structure. You need to know what if S corp is beneficial for you, and then partnership or a C corporation. Then slice 2 would be the record keeping. You need to check your financial statements so you would know what are the taxable income remaining at the end of the year, maybe mid-quarter or even every quarter. And then slice number 3, what are the different business expense that can be personal to reclassify as a business expense. That's why we talk about maybe putting yourself on payroll or putting yourself in a 401k plan where it's still your personal gain, but the company pays for it. Then also those business tax credits are the slice number 4 that helps you to cut your taxes, like research and development tax credits, what solar credits. If you have kids, dependent care credit, or those are the different education credits are another. And then slice 5, we have the tax sheltered plan, 401k, annuities, executive bonus plan. These are the things that can maximize your deductions. and tax savings strategy. And lastly, tax filing. Why do you have to file taxes on time? Because there's a penalty of not filing on time and not paying on time. So all of these strategies are in part of the inside the box of your business, or it is a something that you want to review in able for you to make the most out of your deductions. It's not just tax filing. Do not just rely on a tax professional. You need all of this. So in because what our end goal is to for you to create a succession wealth planning from your financial position, your legacy, your replacement of your income and other financial needs. This could also help you. So if you're sending kids to college, you would be able like putting your kids on payroll, having them educational plan, business succession planning, and mortgage and other debts, and estate tax coverage. These are the 7 fundamentals of financial planning. So why WICO tax? Because we provide a worry-free year-round competitive and on-time tax accounting and payroll wealth planning service solution in the US. All of this you need to outsource. We operate 100% virtual because we provide you peace of mind, you save headaches, save time, save money, and you know you have faster access to grants and loans, whether you're applying with the SBA lenders or any other bankers. So we do have this one-time bundle offer. If you get the package, we for your bookkeeping for 2024 and tax compliance, we would be able to have unlimited access to our through text and email through our virtual accountant, and we would file your tax return on or before September or October, and we can actually give you a free 10,000 tax savings report. All right, so if you want to connect with us, just scan this QR code and you would find me on Facebook, LinkedIn, and all of this are going to have the replay on our YouTube channel. Again, if you have further question, feel free to book us online. Again, this is Christopher Waikoko. I'm the Chief Executive Officer of my company, Waiko Tax. It's an accounting and wealth planning service solution here in the US. Again, thank you. And just like you, your tax needs a break. Our goal is to increase your cash flow